Hello guys, welcome to another video. Today we're going to look at VIX 75. So if you haven't subscribed guys, please do so. Alright, so I'll start by giving you the reasons why I'm not sure if you can see this, why I had this here, the buy limit. Why do I have a buy limit there? And when did I place it? Okay, so the reason behind me placing that limit order there was that I saw the price, breaking out of this. So basically if I just run you quickly through this, when I was on daily, right, we can both agree that daily has been dropping, right? But in the past couple of days or a week or two, we've been moving strongly to the downside, but all of a sudden we are doing this. This is no longer as strong as what we used to do on a daily chart, right? So you can see that that momentum to the downside was dying out. And if you even zoom in, you will see that we are not even making new lows. So that's the first sign of, yes, we are going to the downside, but the bears are no longer that strong, right? And also their trend line, if you to put a trend line, you will see that it's not doing so well, their trend line. Then when I moved to H4, which is where I took the trade, now you need to listen. Remember, I saw the structures on daily that were no longer so strong going to the downside, and we're not making new lows. So the bulls are pushing, they're trying to take over, right? But it's not yet confirmed. So when I looked at my H4, I found that the bulls, they broke this, and this is the sort of the support that pushed up and broke that, and it even went up than that resistance. So that's when I was like, okay, at least here on H4 I also have something to say that there's a momentum shift into the upside. And when I looked at daily, it was giving me a backup for that, which is where I was like, I just want to pull back to this support that did all of that. So basically I was anticipating a touch there before taking off, and then this way my take profits, I already hit my take profits. But unfortunately the price went down until here. It didn't touch my limit order, and then I missed out like that. And the reasoning behind placing my take profits there, if you've been following the channel, you know that I always tell you to target the next opposing structure. So the first take profit, I put it here on this zone, and the second one I used the daily one. Basically I just sorry about that. So basically this is what I did. I used this one. You can see this is TP2, and then TP1 was from H4. So that's basically how you trade. So now this order is no longer valid. We have to remove it, and then we will assess from scratch. So here I just wanted to show you how do you come up with these setups. You don't just look at one time frame and then make your decision there. So let me remove the orders, and then we will continue with the fresh analysis. Okay, now the orders are out. Let's carry on. So we always check the highest time frame first, and then we work our way down, because if we just look at one time frame, I'm telling you, we're going to miss a lot of information. So here we're not going to waste time, because the last time we did the analysis here, it was the same. The candlesticks were more or less the same, right? So what we're going to take from this is that the price is inside a monthly support. So it's not, that's why when the price was struggling to make those lower lows on H1, on daily, that it's not that just struggling, it's because it has hit sort of the floor on the higher time frame. We're at the support, so we can end up with what a pullback. So we can have a pullback from this. We're not saying a monthly support can be broken. What you need to understand is that these key areas, if you can identify them, you'll be able to know where you should be searching for trades, which areas the price has got high chances of respecting. Because when you know these things, then it's easier for you to know where exactly to search for a trade. So here, because we are at the monthly support, we are saying it's not a bad idea if we get buy trades and we take them, and we will be targeting at least this resistance. If you have a long-term kind of a thing, we cannot look past that. Why? Because our monthly chart, as much as we are saying a pullback is it's a possibility right now, but we shouldn't forget that our monthly is bearish. It's very bearish. We just know that just because we are bearish does not mean the price should move like this. A healthy price, it's a price movement, it's something like this. So it will have those pullbacks in between this. So this is something that we are saying is possible now where we are, but we don't know if it's going to be a pullback or it will end up being a trend reversal, but we don't predict such. For now, we will say from here where we are, there's a chance of it going up to at least there. That's it. We don't know what's going to happen from there, whether the downtrend is going to continue or the bulls will take over and take out the resistance and then take the price all the way up. We don't know about that, but we're just saying from where we are, even if the pullback might not be that, until all the way up there, but it's a possibility to say that from where we are, we have a very greater chance of getting a pullback in the next coming weeks or so. So that's all that you need to take. We are at the support on monthly, and even though we're still bearish, but we have a very high possibility of making a pullback, like a very decent one. So let's check our weekly chart. So this is the weekly chart. On the weekly chart, we don't have anything changed as yet. We're still very much bearish, and we have got your nearest resistance there and your bearish trend line. So today it's the weekly candlestick is left with about a day and a half for it to close. So maybe if let's say, I'll predict this now, it's I'm not saying it's gonna happen. I will say, remember what we saw on monthly saying yes, we can, it's not a bad idea for us to search for trades to go long, right? But here on weekly doesn't yet have something tangible that we can use for us to say it is giving us a backup to go to the upside. But if this current candlestick maybe goes up and closes somewhere there by the end of tomorrow, when the candlestick closes, when the week ends, we will say yes, even weekly is giving us backup, because it will have what we call bullish engulfing. So if we get that bullish engulfing, I have my fingers crossed on that one to say it will be the one that's giving us more confirmation to say yes, we can try and get that pullback. And on weekly is gonna say, if you're trading on weekly, it means your pullback goes until that resistance or that trend line, whichever one is hit first. If you're trading long term on monthly, remember you are targeting that monthly resistance. So it's the same thing. So you need to pick the time frames that you're trading on and then make your decisions where you're going to exit and stuff like that, using the structure on those time frames. So that's all that we have here. We are still saying yes, we want a pullback. We want a pullback because the location allows us to search for a pullback, as being inside that monthly support, and it's a very fresh one. Let's check the daily. That's where, when I started the video, I was saying to you that we are now struggling to continue with this, the aggressiveness that we had there. Now we are just doing this. At least even when we are still here, it was better because of what? You made a low, you made a lower low, you made a lower low. This is the lowest point. After that, we never had another lower low. Here you can see we failed to make a new low. That's another sign of weakness. And even the trend line that you had is being challenged. Now it's broken. You can see that now this is possible. We don't know how far it's going to go. If you're trading on daily, you still need to be worried of these areas. You need to set your take profits there. That's why when I started the video, I showed you that because I was trading H4, I used this as my exit, and then another one as a bigger daily zone. So you need to use the structures on your time frame for you to do what? To set your take profit. So you see, you cannot just take a buy trade and pretend like you don't see the obstacle in front of you. Here, that's why my exit was here. Let me just put a horizontal line, and you can see that it was a hit. Now the price is sort of reacting. If you check this side, you see, because this is a very strong area of resistance that pushed it down and created a new low and continued with what us updating the trend line and stuff like that. That's why when the price went back to it, and this resistance is still active, you need to set your take profits there. Don't act like just to be broke. No, don't do that to yourself. Hit the next opposing structure, go out. So here, if you wanted to continue buying, because remember now we are outside the trend line, right? So we just need to mark this as your support somewhere there, or yes, you can keep it there, and then this is your resistance. So when if the price gets here, If the price gets here and it gives you confirmation on your smaller time frame, maybe your H4 or H1, you can use that because you know you are at the support that initiated the movement, pushing up and doing what? And breaking the trend line. You see? So that's basically we are like consolidating. You see? So, but if the price is to break this, then you'll say we are bullish. Then you can definitely buy from the support and continue like that. But keeping in mind that we'll be targeting that you're not going to go past that weekly bearish trend line or that monthly resistance. And because of what, those time frames are still very much bearish, even though this one can turn bullish because it's a smaller time frame than them when you compare it to them. So that's why a trend reversal will always happen on a smaller time frame first. So when you're trading here, you need to remember that the other ones are still pointing down. So when you hit the structures, you need to go out. You must never fight those things, man. You'll be discouraged when you see the price, not respecting what you said you must do. You're saying the price must break a trend line, and then you see the trend line holding for 10 more days. You will be like, imagine you miss it like that. Don't predict that structures like that are going to be broken. No, just say this structure is still active. I'm taking a trade here. Once that structure is hit, I'm going to go out because of what? It is still active. Done. You've taken your profit. You're out. Now you're just watching how the price reacts there. All right. So let's do H4. So here I'm just saying to you, you're consolidating and you need to say from this support, you can buy, from this resistance, you can sell. But with what? With confirmation. When you are selling, because you are selling in a consolidation and not in a downtrend. In a downtrend, you just sell and continue and continue. But because a consolidation, you're gonna sell, you're out here, and if you get confirmation, you're gonna buy out there. If you don't get confirmation, the price will then break. If it breaks, you're saying the consolidation is over, we are now bullish. And when we are bullish, I just need to continue buying now, no more selling. That's it. If you don't get confirmation this side and the price goes down, you will say the consolidation is over. We are now continue selling, and then you can update your trend line, and then now it's still active, and then you back to bearish. You continue selling like that. That's it. That's it. So let's check what we have on our H4, right? So this is our H4. Our H4 is definitely bullish, and you can put a bullish trend line here. That's your bullish trend line, and this is your support. Now you need to be very careful. I want you to pay attention now. Please, 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 please. This is very important. Yes, we have got a bullish trend on your H4, right? And you have a support that I just marked here, right? And you're planning, ideally when things are like that, you are planning to take a buy trade from that support. Yes, the price can do, it can do this, it can do that. Yes, it can do that. But this is very, 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 very risky. I'll tell you why. Because remember, if you still remember, this horizontal line, it marks your daily resistance. Still remember that. So this is where your daily resistance starts. So basically, currently what is happening, the price is coming from your daily resistance, is pushing down, and if it gets to your H4 support, you see now we are coming from a daily resistance, pushing down to a H4 support. The support, and on your H4 you are still bullish, but buying there can be very, very dangerous because of where the price is coming from. Daily is way bigger than H4. It can defeat you like it's nothing. It can cause the price to just break this like it's nothing. So that's why when you want to take a trade, you need to first check where is this price coming from when it's coming to this zone that I want to trade. It mustn't come from a bigger zone, because now if it's coming from a bigger time frame structure, that's something I should be worried about. Because what if that bigger time frame structure causes a reversal and we end up with what? A continuation of what? The bearish trend. You see? So that's what I'm saying. When the price, if it had went outside and break that daily resistance, then you will know that this does not exist anymore. So when you are coming back and you're taking your buy, you are not necessarily fighting that daily resistance because it is out of the way. So when it gets to this and you decide to go in, it's very dangerous. You can do it if you want to, but maybe with confirmation, but it's very, very dangerous, this one here. Yes, we're still intact, the trend line is still there, and the trend also is still there, but where we are coming from is what I'm worried about. One. So, but for now, we are saying a pullback, just to refresh, we are saying a pullback is something that is very, very possible, but we need to be careful as like how we go about that, right? So now we can maybe check H1, which is going to be the last time frame. So you can see there we touched that daily resistance that we spoke about when we were on a daily chart, if you still remember. Remember, that's why I put the horizontal line, this one here. Yes, this one, when we said we are consolidating between this and this, still remember that. So we just touched it there. Now when you look at H1, you can see that immediately the price touched that daily resistance, then it sort of supplied what it sort of pushed in, put in the liquidity to push the price to the downside, and that happened, right? So that's why I'm saying when you're having your buy trades, or that trade that I showed you that got missed, that's why I wanted to exit there, because of what I cannot predict that a daily resistance is going to be taken out. I don't need that stress. I will trade until these structures are hit, and then I go out. You see, then I watch how the price reacts there. So even if you had said, oh, now we are at a daily resistance, and you see this bearish rejection candlestick, if you wanted to go in and I ask you why, you will say because of the location and the pin bar that you're getting there. It is what is giving you enough reasons for you to say I can take a short-term trade to the downside. Remember, you took this pin bar, which is on H1. It means you'll be targeting H1 structure, which is what the nearest support on H1, or H1 bullish trend line, whichever one is hit first. That's it. That is it. Location is important. You knowing the key structures and the trend, very important. So here we can see the price is coming to the downside, right? And if you are trading H1 and maybe you couldn't take that sell there, and now the price comes outside, and then you're like momentum shifted, you can maybe catch another sell like that. But I think I would be more happy if the price was to break this, so that we can have that pullback that we want, but for smaller time frames, these ones here, we definitely can still play around. So it all depends on the time frames that you're trading. For as long as you know that wherever you are trading, whether you are someone that trades M15 or someone that trades H1 or whatever, you need to make sure that you know that there are key structures there. And you having key structures there, it means when you're taking your trades there, you'll be using those structures to exit and to place your stop losses. Don't make that mistake of trading on M15, but at the end of the day, you take a buy on M15, and when I ask you where you're going to exit, you're telling me you will exit after 3 months when the price hits a monthly resistance. But now you said you're trading M15. So what are you saying about all these time frames that you're skipping in between? So you don't care about their resistance and their bearish trend lines. And remember, those time frames are bigger than the time frame that you're trading on, which means that's not a smart move. You see, you pick your time frame, you stay there, you make your decisions there. That's it. And the next opposing structure is hit, you go out. That is it. You'll see your account growing. All right, guys, that's all that I wanted to share with you with regards to this one, which is VIX75. And if you like this style of trading, you can just subscribe and hit the bell icon, so that whenever I make a new upload, you can be notified and watch the videos. Or if you want to learn these concepts in full depth, you can just text me, and then when I start with my first group for this year for mentorship, I can add you to that group. Alright, guys, otherwise this is all that you can expect from VIX75. I'll see you in the next video. Thank you.